Good morning, entrepreneurs. Today's lecture is about tax audit number 3. What item the tax auditor will check? If you notice, you can tell like which point you have to pay attention. This is what I have talked in the last lectures. Tax audit will take place especially for the earning for the company which is making profit and receiving the consumption tax and the sales and profit increasing and booking too many expenses. And when the tax auditors come to your companies, what item or expenses they're gonna look at? The first one is like timing of the sales and the entertainment expense and the inventory and the understatement of the sales and the sales for the employees. There is 5 items you have to really pay attention to it. Let me explain you one by one. The first one is timing of the sales. The first case is when the company is intentionally deferring the timings of the sales. Like when your company make a lot of the profit, some management think that they want to recognize, they want to book the sales revenues not this year but next year's. So those timing difference, the tax auditor will check it like 100%. And sometimes the company make a mistake, like not intentionally. For example, under the Japanese tax law, sales has to be recognized when the product or goods are delivered, or like when you completed like all of your services to the customers. Then you have to recognize the sales. Not, you do not recognize the sales at the timing of the cash payment from the customers. So sometimes people make a mistake, but it will be corrected during the tax audit. The second item is entertainment expense. What tax auditor will check is, first, they will check the total amount of the entertainment expenses. Like if your sales are like 10 million Japanese yen, and if your entertainment expenses is exceeding like more than 2 million Japanese yen, that looks just strange. So they start looking at your company's entertainment expense, and they will check the entertainment expense, like a drink or having a food with the customers. They will check whether it's really for your business or for your private, because some people they always include their personal expense, like having a dinner with your families or friends into the business expenses. So they gonna ask you like who you go to the drink with, or who you play golf with. So in the receipt of the entertainment expense, I recommend you should put the name of the customers you go drink with. Third item is inventory. Well, in case like the company purchased a lot of the inventory near year end, but when the auditor look at your balance sheet, there is like very small amount of the inventory. So in that case, that auditor will think that your company recognized overstated amount. Your company recognized like overstated amount of the cost of the goods sold intentionally. So they're gonna look at the inventory at your storage and check whether the inventory does not really exist, or they are still in the storage or not. And number 4 item is understatement of the sales. So like cash business, like a restaurant or bar or sometimes consulting, they receive the cash, they receive the sales from the customer by cash. So some people, they, when they receive the sales, they put it into their pocket, or they ask the customers, to pay the sales into their personal bank account. But I'm sure that auditor gonna find it, because auditor can check your bank account and without your permissions. So they have the access to the bank. So if there is not recorded transactions, they will find out that you're hiding the sales amount. Number 5 is salary for the employees. What the people do is pay the salary to the employee who doesn't really exist, and to increase the expenses. And sometimes that but people pay the salary for your families, but your family is not actually working at your companies. So in those cases, that tax auditor will check the record of your family's work times, and check it whether your families or employee are really working for your companies. When usually the tax audit will start from a call. The tax office call you, and they will inform you that they're gonna start the tax audit. If you receive a call from the tax office, please contact with your tax accountant. Tax auditor is fair, but they are very experienced, so sometimes the people say something like not necessary and they get taxed. So I recommend you to talk with your tax accountant. Thank you very much. See you next time. I'm giving you the useful information about the business in Japan. If you don't want to miss it, please subscribe this channel. See you next time.